Hello everybody, my name is Mark. Welcome to another one of my investing videos, and in this video I did a very good thing on my steel option collar. I'm still taking some losses, but those losses are very short-lived because steel is still dropping. It's down to $15.67 a share, but let me show you what I did on my collar. So first of all, let's look up the original position here. Let me put in steel, and this would have been back in March when I first entered into steel. So here it is right there. I bought 200 shares of steel, and you see 160. You see two orders there because of a mouse error. I accidentally canceled this order, and 35 shares got filled, so I did have to pay the double commission. Too bad, so sad. But I do have 200 shares of steel, dollar cost average, $20.66 a share. And then I bought to open two put options, $20 strike price, spent $399 a contract. And then I sold two covered calls, strike price $24, took in $53. And then scrolling down back here, I sold to close my two put options. These are the $20 puts, and I paid $399 for those, and so I spent $806.48, and then I sold to close them at $580, so I got $1,151.50 for that. So I made about $350 and $345 of profit, and then I took that money. I took that $1,151, and then I bought to open not two, I bought to open three put options, $15 strike price for $285 a contract. So I took my $1,151 profit and I spent that money on three put options on steel, and they expire on January of 2021. That makes them leaps. And so I get to put some cash, I get to put the extra money that I didn't spend into my cash balance, right? And so I made $1,151, and then I took $864 of that, and so that would be about $287 of that I get to put into my cash reserves. And if we look at my balances right here, that money goes into my cash available for withdrawal right now, which is at $23, and I'm sorry, $23,663. So back to my transactions here, and back to steel there. And so there it is right there. I took that money and I bought three put options. Now, there are two advantages of what I just did. The first advantage is what I just said. Okay, I get to make $300 of a profit, or $287 profit, and so it still goes back up. That's $287 less dollars that I have to worry about, which lowers my dollar cost average. But there's a second advantage of what I just did. So the second advantage is if I go to the option chain, let's look at the delta on those two puts, okay? So first, let's go ahead and go to the option Greeks like this, and click the view chain, and then we go out to January. Actually, first we got to click on the puts, and then we go out to January of 2021. And here's the $20 put right there. And so if we go out to the delta is at 54. It's actually negative because of the put, but just remember 54. That means that every dollar that steel goes down, I make $54, okay? Now the delta on the $15 puts is 33, okay? So the delta is times 3, so 33 times, that's a 99, and this one is 54 times 2, that's a 108, right? So I took now the gamma is a 3.9, almost a 4, so that means eventually this delta is going to catch up. And when the delta catches up, like let's say this delta goes up to like 40, okay, it goes up to 40. I have three puts, so that would be 420, and this delta would probably go up a little bit, and this delta would probably go up to about a 60, and eventually this delta is going to overpower this delta, and I'm going to make more money because I have three puts, and which gives me the right to sell 300 shares of steel, which I don't even own 300 shares, I only own 200 shares, right? So I would actually make money eventually, and there's an earnings coming up on steel. And if we look at the earnings, that's coming up on May the 2nd. I believe that's next Wednesday or Tuesday or something. Today is the April 25th of 2019. And so that would be in 7 days from now. So I guess that'd be Thursday. And so when earnings coming up, my prediction is that steel is going to go down. But if it goes up, that's okay too. But it's either going to go up or down $2 or $3. If it goes up $2 or $3, then steel will go back up to maybe $17 or $18 or even $19, its old levels. And my new dollar cost average is now, my old dollar cost average was, let me put in the steel here, and let me put in March like this. So my old dollar cost average, $20.66 a share. Okay, now on the money that I made here on the $1,151, okay, that lowered my dollar cost average down to, I think it was $18.94 a share. So that's my new dollar cost average. So if steel goes back up to $18 or $19, then I will no longer be down in this position. So now if the earnings is bad and steel goes down to $12 or $13, well, my put options, I spent $285 a contract, $15 strike price. So 15 minus 285 is $12.15. So $12.15 is my break-even price on these 3 puts. So if steel goes down $12, $13, then I'll very easily start selling to open $12 or maybe even $11 puts, and now I'll be making profit on 3 puts. Okay, so basically what did I do here? Okay, the first thing I did was I bought the stock. And then I simultaneously bought the open and put options, okay? And the put options are contracts to sell my stock, and I chose $20. Okay, so the puts that I bought were $20 puts strike price that lets me sell steel at $20 a share. So if steel goes to 0 or if it goes to $5 a share, I have a contract that says, okay, I know steel is $5 a share, but I'm going to sell it at $20 a share, and I make all that profit, okay? And I spent $399 for that privilege. Now, when steel started going down like crazy, man, and it's down to $15.67, then this $399 ballooned up to $580. How would you like to do that? Spend $399 on an investment and watch that investment go all the way up to $580? That's a $180 profit on a $399 investment. You know, that's like a 40% return. Actually, it's a 45% return. How would you like to do that? Yes, I am down on the shares, but at some point, and the nice thing about buying stock is that they don't expire. So as long as steel does not go to 0, and at some point in the future, I will eventually make back any of the unrealized losses. As long as I hold the stock, the losses are just paper loss. They're unrealized losses. At some point, you know, if I continue to make profits, buying and selling these puts, selling the open to cover calls, selling the open to these puts, then at some point I will be up overall on the position. So if you do option calls, the first thing you do is you buy the stock, 100 shares, 200 shares, whatever, and then you buy a put. Okay, the put is a contract to sell the stock that you just bought, and then you can sell cover calls, which means you're giving somebody else the right to buy the stock that you want to sell that you just bought. So how's that for a mind-twisting pretzel? And then if the stock does go down, and ideally it would be better for the stock to go up, but the option caller, if the stock does go down, protects you. It way prevents you from losing money. And so you buy these puts, and then you can make the profit, and then at some point you can decide, like I did, okay, I spent $806 for 2 puts. Why not sell the 2 puts, get $1,151, and then take part of that $1,100 and buy some more puts? So instead of having 2 $20 puts, I now have 3 $15 puts, okay? And I did lower my delta a little bit, but that's okay, because the whole reason that I did this is because of the earnings that's coming up. And the earnings on steel, again, is coming up on May the 2nd. And let's click on the earnings like that. Come on, slow computer. And there's the earnings right there coming up on May the 2nd. And if we look at the chart as I close out this video, let's look at the chart on steel. And let's go ahead and put in steel right there, and let's go to the chart, full featured chart like that, and let's clear all that out. I do lots of charting, and let's put in a 6-month chart. Okay, so here's a 6-month chart, and when did I buy the steel? That would have been on March, right? So let's go to transaction. It would have been on March, and click the view chain, the X like that. And that would have been on March the 12th. So that would have been about a month and a half ago. So if we go to March the 12th, put in my little drawing tool like here, that's where I bought, that's right about where I bought it. So since I bought it, it has been doing nothing but going down, but that's okay. As I just been talking about in the video, I have those puts. I'm making nice profit on the puts, and that has lowered my dollar cost average down to here. So my dollar cost average was up there, and now it's down there, and eventually I'm going to cover all of that gap. All of this is going to be paid for, signed, and delivered by the profits that I make on these callers, these puts, and maybe at some point it still has a good earnings and it goes back up to the $18, $19 levels, then I can start selling some covered calls at the $20 or $21 levels. So that's it for this video. I really like the option caller strategy. It's good if you're a conservative investor and you like to buy and hold stocks. Now, if you're an option trader and you're really good at doing credit call spreads or bull put spreads, then you know, you can do that. But that's a different kind of trading. It takes a different kind of mindset, and I'm not very good at that kind of trading. I certainly want to learn how to do that, but the option callers work very well for me. It's a very safe strategy. It's much better than the covered call strategy. Imagine if I was just selling covered calls and I would have just sold a call. I would not have the privilege of taking in all that profit on the put options that I sold. So now, right now, as this video comes to a closing end, going back to my positions here, I have 200 shares of steel, and I have 3 put options on $15 strike price puts. And for now, I'm not selling to open any puts. I'm not selling any cover calls. I'm waiting until after the earnings. And then when steel makes its move, that's when I make my move. So that's it for this video. Thank you for watching. As always, if you have any questions, feel free to leave in the comment sections. And if you like my videos, leave any supports or like buttons, whatever you want to do. And I wish happy trading to all of you, and I will see you in the next video, and have a good day or night wherever you're at. Thank you.